All right, just from a quick technical standpoint, there's going to be a little clip here. We're looking at the S&P 500 on the weekly time frame. From this peak back here to this sell-off was a drop of about 78 points, and this happened in '02. And the same thing in '08, came down but dipped a little bit lower. And this difference between these two dips is about 12 to 13 points or so on the S&P 500. So it was 78, then 90, roughly. Remember, 12 to 13 point difference. And then you kind of saw the same thing back here from both of these lows where the COVID crash and the COVID sell-off happened, right? If you take this to here, you saw a drop of about 13 points or so again. With that being said, usually when it crashes, usually when the S&P 500 crashes or does have a correction, essentially within the near future, it does often come back and dip a little bit lower before a rip. Now, from the low of where we've been at on the S&P 500, which is so far we've dropped 119 points. If we were going to drop another 13 points, right, after this little mini rally, this would bring us down to 350, which is pretty interesting because we talked about 350 and then using the fib retracement from the low of the COVID crash to the peak where the S&P 500 peaked at, you're going to find that about at the 0.5 on the fib is 350 exact. So essentially we are looking for another climb back down to this. Whether we get a relief rally in the meantime, that is completely up to the chart. Let me know what you guys think down below. But I'm thinking at some point the SPY will bottom out at 350. I personally don't think we are quite there yet. I think the Fed is trying to save this from a harder fall than it's already in.